We'll make a start. So I've laid out the agenda, pretty much the what you logged in for, and hopefully what you'll expect. I'm Paul O'Brien. You would know me, a lot of you would know me from calQrisk, but I'm here today with the Greenfeet hat on. Greenfeet is a carbon calculator and ESG tool that we acquired now over a year ago, and we have basically quite a lot of traction in the credit union space, a lot of people interested. So today's session is more informative. So I'll just tell you what we do for credit unions and what the expectations are on the sustainability for credit unions. The agenda, you've seen it, so I just begin to go through it. A little bit about Greenfeet. Again, as I say, we share this, so you get a copy of it. Some of you I know are clients, and you know us already from this, but we'll move quickly, I suppose, to the core of what we want to talk about today, which is the ESG. Most of you will be familiar with these pillars, the environment, social, and governance pillars, which is where the ESG comes from, and these are the original, coming from the original Sustainable Development Goals of the UN. Now, for credit unions, the development goals, particularly the governance and the social one, are, I suppose, already well enshrined, shall we say, is the best way to put it. Probably the most highly regulated, voluntary-led, not-for-profit organisation. The governance aspects of the ESG are for the most part enshrined in legislation and regulation and comprise of a raft of compliance requirements. And pretty much, if you're obeying the law, if you're meeting all the regulatory requirements, then the governance is in fairly good shape. You keep an eye out for the things that would trouble you, like fraud, the things that people and process failure around the governance, but generally, I would imagine that all credit unions on this call would pretty much have the governance under control. The other thing on the social side is that credit unions find ways to support communities beyond their core remit, and they recognise as leaders of their performance, of the important role of providing access to fair priced finance to members in their community. My father was a volunteer in the credit union movement, a founder member of a credit union, and a volunteer at all levels for 40 years, and he always maintained that credit unions strengthen democracy, reasonable access to prudent lending, equalised opportunity, and that is true, I think, globally. So credit unions also are the top reputation, and they are top in reputation and trust, and that's pretty much globally as well. So in the past, the reputation was built and maintained by local people, seeing local people and meeting them regularly. That is less common these days, and to some extent, social media has a big part to play in how visible presence is maintained. But the personal friendly service remains at the core. It's enhanced by technology and the wider product offering. And while the credit unions are regulated social enterprise, they're also businesses with competition. And that's important to remember. Remaining visible and effectively messaging to membership and prospective membership is a very important part of the activity. So things like local sponsorship, signage, community, where the community gathers, social media messaging, relationships with local media, and much more make the output effort of the organisation in social visibility terms. Last month, the Irish Legal Credit Union issued results of a detailed survey they did, and the survey was basically across credit unions who contributed financially to the social engagement and social involvement with their communities. And in 2024, The ILGU member surveyed spent 8 million in community activity, and there's a very good blog on the league site that shows some of the projects that that money was set to by the credit unions who contributed to the survey. And really, it is inspiring in that it is just some of the ideas, some of the things they do, and some of the visibility and the engagement. And it's not just the money, because everybody who's in the credit union or associated with the credit union knows that it's much more than that. It's the members, it is the volunteers and the staff that contribute by their presence at these events, their engagement with these events as well, where the money goes. So really, trust is in the community, trust and respect, and a very strong, good reputation is associated with the social aspects of the ESG. So there is some regulation associated with it, and they're listed here, things like the child labour and engagement with organisations that might be engaged with child labour, that kind of thing. It's one of these things that ethically and morally and almost by opportunity doesn't happen in credit unions. They are tremendous community and social community organisations. Okay, so that brings us to the E, and the E is and the environmental one is probably the one that has gained the most notoriety, so it's the most traction, the most attention. The couple of things happening here. Obviously, the denial in America and the turn back on what was a tremendous effort, ongoing effort to focus on the reduction of carbon emissions, and the resultant, well, first of all, the commitments that were made in Paris at COP21 by almost every country in the world, and the rollback by Donald Trump on those commitments for America was a bit of a shock. And there are some countries who have kind of relaxed on the thing, but most organizations have continued because they are probably more aware of the reality of the problem. When they're looking at things like flooding, things like coastal erosion, and the kind of things, the weather patterns, and the reality of the evidence of our eyes to some extent. And it is unfortunate that somebody in that leadership position basically turned back on the effort and turned off the effort of some. Now, I'm an optimist, and most of you will know that have heard me here before, particularly on this topic. And I believe there is still an awful lot going on that gives us hope for I won't say conquering the climate change problem, but certainly getting into a control position where we can slow the impacts and potentially begin to reverse the warming or the cause of the warming. But from a sustainability, from a credit union perspective, we talked a little bit about the social impact. The green finance opportunity is something that we're going to talk a little bit about later on. Basically, as solutions are devised and the solutions become available to the communities in which the credit union work, the demand for those solutions and to borrow for the implementation of those solutions will grow. And recently, the cited manufacturer of the motor industry issued some stats to say that there's a 25% increase in the uptake of EVs in the first 2 months of this year. And I'm sure that you and the credit unions are seeing that coming all the way through to loan applications as well. So the change is gathering momentum in the public. Now, obviously, that some of the difficulties associated with batteries and associated with charging points, all the rest of it, are being overcome. And it is a continuous process, albeit we get impatient about it at some stage. But now, for example, you can buy a battery that's guaranteed for 10 years, and the claims laid by some of the motor manufacturers now are taking your range over 850 kilometers. So you can see the advance, and that advance is beginning now to be implemented into I'd say, the more cost-effective vehicles. So increasingly, that anxiety is going to disappear, and we can see physically where the build um, of the charging stations around the country is increasing all the time. And I know that some credit unions have put them into their own car parks. So that whole progression is happening, and that obviously feeds into the finance opportunity. Um, the One of the other benefits or one of the other issues that sustainability means is the community that you're working in is interested in knowing that there's a strong commitment uh, to uh, to sustainability from the local credit union and indeed from the movement. The other thing is that the edge, the operational efficiency is important. Um, the adaptation of sustainability measures, and we'll talk a little bit later on about what you can do. Green offices. We know that a lot of credit unions have put in heat pumps. A lot of them put in into their own premises. They put in solar panels, and then basically your issue is that the credit union membership is interested in maintaining its trust in the credit union and its reputation, and being part of the global solution here is what you're almost expected to do. Um, so what does sustainability mean in credit union terms? Well, the first one is your operational footprint. So what you're looking at in carbon emissions, your scope one, two, and three. And direct emissions to the building, you're probably all familiar with this at this point. Energy consumption, the waste resource, the management resource is also a key issue. So what you're sending to landfill, um, what you're recycling, and all of the things that you can do to reduce footprint. So you're thinking about things like your AGM booklets, the digitalization of things that you would normally print and post. So there's cost savings in some of these things as well. The climate risk we were talked about under the calQrisk banner, where you got your physical risks to your current assets, and you also got the risk to your members' assets as well, with floods, with changes, with high winds, something that we sometimes forget, and also we've got the transition risks. So, what are your membership doing? What are they faced with? What are they confronted with? Um, and as I say, that's covered by the calculus side of what we do. Um, Initiatives like biodiversity, reforestation, people talk about these things, and in many of the links that the league document I talked about earlier on, and by the way, I will share that link. In many of those, you're looking at these kind of biodiversity projects that are part of what is going on in communities. Um, Basically, what you manage, you only manage what you measure, and key performance indicators in this space. And I'm thinking particularly and talking particularly about the carbon emissions part. Um, Measuring and managing and reporting your emissions is a business process. Um, these are some of the identified ways to do it. So basically, what you're looking to do is improve the process, and typically what you've got to do is begin to measure, know where you're at. And in some cases, we come across credit unions have done a lot, but they haven't measured it. So what we do is we help organizations establish a baseline, prior to where they were, because all this data exists, prior to where they were, establish a baseline for where you're at, and then watch the benefit, watch, publish, and report the benefits of what you've done or what you plan to do. So basically, data, it's all about data. Um, and you have the data, strangely, it may not be that well organized in some cases, but basically the data is generally in the organization. So it's a matter of managing it and presenting it in usable form. And usually when this happens and you get a process and a program around the emissions reduction and all the associated things that can be done to reduce those emissions, you get enthusiasm among the membership, enthusiasm among the staff, and buy-in. And that is, once you begin the process, the organization begins to become proud of its results. Okay, I'm going to talk a little bit about the scopes. So the scope one is fairly clear. It's um, the direct emissions. So that your vehicles, your fossil fuels, whatever you're using to heat the building. The energy indirect emissions are the purchased electricity for powering the branch offices and the data centers, anything you have inside, any of your IT assets. And then finally, the scope threes. In credit union case, these are finance. So there's direct, there's other indirect. So these would be associated with your vendors, depending on what you're buying in and how it's been delivered. There are 15 categories here, and of those 15, there are 47 subcategories. So some of them are listed down the side of the slide here, and you can see some of them that have been part of the calculation that's here. And we can demonstrate here the emissions by scope type. A couple of the big wins, obviously, is if you change your electricity provider to a 100% renewable provider or put the degree of which they are renewable into your emissions calculation, then obviously the number drops significantly. But as you begin to gather them across all of the places that these emissions come from, for example, one of the ones that's significant in scope three is the acquisition of IT assets. So the purchase of computers is, for example, one of the high values. But the other ones that we talk about here are the financed emissions, and that's part of the core business. This is where your lending activity and your investment activity, and where you hold your money on deposit, and the emissions associated with that. They are significant in numerical terms, and they're probably the more difficult to measure, but they also, in scale, they would overwhelm the operational one. So we tend to do both. We show the emissions in their totality, and then we show the emissions in operational terms, and we look at them in the financed emission terms. So this is what the calculator looks like. The um, This is just looking at the units of of an electricity bill in this case, and then the key issue is the units and the emission factor, and the formula is simple. It's the activity data, which is the unit, multiplied by the emissions factor will give you the total emissions for this particular activity. And this data is all published on the various bills that you'll have. And the emissions factors, they come from the source of the specialist sources around the emissions factor and where they come from. And they're renewed, so that they are continuously monitored. So, like DEFRA, the ACCA, there are regulatory bodies that do them. Mostly, it's government-led organizations that maintain these and publish them. The finance ones are more difficult, but I'll get to that later on. But basically, we get and maintain the factors for all of the scopes and all of the elements and right through the sets and subsets of the scopes on a continuous basis as those standards or those emission standards sources are updated, and they're updated with reasonable frequency. Most of them don't change much, but sometimes there is sort of a breakthrough change on some of them. Um, there's a question about reporting, and one of our experiences with credit unions is that reporting at branch level, particularly with organizations that have multiple branches, and we know now that with the consolidations of credit unions, there are multiple branches in many of the credit unions, and the system allows the emissions to be tracked at branch level, and this gives you uh, decision making, if you like, strategic decision, operational advantages can be seen. Um, so from having data at this level, we have our experiences that we found it very useful, and the credit unions that we're talking to are delighted to have it. And it's relatively easy to report it this way. So you break it out by division, you get the same sense. So we're thinking that we could probably get an internal intensity metric for the emissions across the branch network in credit unions. So um, you find things like hotspots. So what does it do? We sat down and thought, okay, why is this useful? It enables some strategic decision making. Now, obviously, and I should come back to this. Remember your core business. Your core business isn't to save the planet. Your core business is to get your lending done, get your income sorted, and basically survive in the business as a non-profit and generate a surplus. That's the core business. So you're not going to turn away from anything simply because it emits uh, carbon dioxide, and that's true of any business. So I mean, Ryanair are not going to stop flying. People aren't going to stop flying until there's somebody says they can't. But so people will continue to generate emissions, albeit they are trying to reduce the emissions they generate and their personal carbon footprint. But at the same time, people will continue to borrow to go on holidays, and people will continue to go on holidays and do the things that they normally borrow for. But strategically, you can begin to make decisions around what you're seeing and what changes that are happening there. The level of measuring and monitoring um, at emissions level does, however, inform other things. So it might uncover inefficiencies, for example. The other benefit we see in the brand is that it certainly builds trust and visibility in the community when you're active in it. So what you're looking here is a data-driven reporting, and it allows, as I say, we're looking at benchmark a shared opportunity. So when you look at operation, you see one seems to be doing better from an emissions perspective than another. Then you simply take the good practice that you have in the good one and spread it into the other one. So you find that the whole thing kind of mobilizes and motivates itself. Okay, I'm going to move to the financed emissions on the lending side. So there's a whole lot of things happening here. Um, the key aspect of the emissions are the green lending versus traditional loans. So this is not just credit unions, this is the whole world. And I've got a couple of links from this slide that basically talk about the green asset ratio, and some of you will be familiar with it. So basically, what you're looking at is there's with all I'm going to call it money. So whether it be lending, whether it be investment, lending, um, saving, depositing in a pillar bank, or whatever. It's a money movement that has uh, an associated emission factor with it. So all organizations, and so ECB level, all central banks are anxious to get the money moving towards green lending. So you can see more and more of that happening in investments. They're now looking at green, but when you classify green, you're talking about improved BER rates on housing, new build housing now being set to a standard BER before it can be built, that kind of stuff. You're also looking at the kind of things that you are lending for. So it's either housing upgrades or EVs, hybrids, any vehicle that reduces the carbon emissions per kilometre of the unit. And all of that, they are the traditional ones. The green loans, a green lending focus on the carbon activities at the time of borrowing. So basically, the installation of heat pumps, solar panels, purchasing of EVs, it's at the point of borrowing that the lending is counted. And increasingly, credit unions are reporting on the GAR number. Proportional loan, so basically your green loan versus the rest of your lending. I put in these and not for any other reason than just to give you an idea of some of the background here. So in money, and I use the word money here, so it's investments, loans, and deposits. These charts, and there's a link to them, by the way. These charts are from the ECB. And what they're looking at is they're looking at over time. It's probably the blue line is the one that's most interesting. So they're looking at the financial emissions. It's a financial emissions factor. So we talked about factors earlier on, where basically, like your ESB bill, it's a multiple of the kilowatts times the factor equals the emissions. This is the same thing. So what they're tracking is they're tracking from a starting point in 2018. They're tracking the emissions of money, and it's the money that they more or less have control of, and they're seeing the movement of the money from the purposes it used to be moved into to now purposes that are green. And so that transition is happening, and what's happening here is uh, over time that factor, the emissions factor for money, is decreasing, and this is where at the end of the day, it's very hard. Sorry, if you're investing, the the unit you're investing will probably know its emissions factor. If you're depositing money, the bank probably doesn't know what the emissions factor would be. But this one, which is an overall talking about the whole of the European money, will give you a fair indication of where you might be in terms of an emissions factor. And the other one, basically, I showed on this is the financial services. So if you look at financial services, and here they exclude insurance and pension, but it gives you, this is an emission factor that's coming out of um, this is coming out of the UK. And again, I have included in the slide deck a link to it. So give you an idea, you can go in, you look around. This is the DEFRA one, it's out of the UK, hugely comprehensive. You can get any emissions factor pretty much. If you can describe what you've got, what you're doing, or what you're proposing to do, you generally can find an emissions factor in here for us. And usually the side metric here they talk about is 1 million. This one is 1 million euro in the euro area, and therefore one is 1 million sterling. So they're your base case multiplier. So they're giving you a carbon emissions per that unit. Okay, I'll talk a little bit about reporting and uh, the 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 issue of carbon is of interest to members. They say, well, what exactly is it? How do they get to be interested members? But um, when you're active in the sustainability space, you've got to let them know. Um, they are interested, and when the omnibus version, the CSRD requirement was implemented in Europe, many SMEs relaxed, including the credit unions. So the stress about reporting changed, but nonetheless, I think most credit unions came to realize that the members are interested in this, and the members want to know. So the the some of the recent pressure, I suppose, that's beginning to come, particularly in Ireland. Now, the UK is slightly different because the UK went very aggressively for a net zero stance, and they're driving very hard with organizations and expecting organizations to be actively considering net zero by 2030. And that's across the UK. And so they're expecting, for example, anybody who quotes or seeks to bid or sell to the NHS or any government agency over there to have a net zero plan. Now, according to the Paris Agreement, it can still be a plan out to 2050 for net zero, but the UK, across the plot in the UK, they're pressing for net zero by 2030 if possible. But the bottom line is that the big requirement to report that was the CSRD reporting package disappeared in Europe with the omnibus, and it became relaxed. So you're looking at the VSME, so it's a voluntary reporting code, but nonetheless, from a membership perspective, we continue to hear that stakeholders, we call member stakeholders here, are still anxious to see reporting. So when you look at reports, there, from our perspective, we're looking at, and some of our credit union members will already have, our credit union clients will already have got this. So basically, an annual sustainability report to members, now part of the AGM documentation. Sustainability needs to be in there. If you want to have a look, I mean, look at your own, just search the word sustainability in your own last AGM reports. Go back a couple of them, see where it features. It's now becoming loud, and it's expected that there is some reference to sustainability in there. Certainly, when we're looking at the Ireland generally, Ireland looks like it's going to miss its 2030 target considerably, somewhere between 8 and 25 billion in fines potential as a result of the miss. And they're almost apologising for it now across Europe, as you know. So the degree of scrutiny on organizations is increasing. And the best way to deal with that is to report on what you're doing, particularly when you are doing good stuff. You're looking at the movement of your lending towards green lending. That needs to be picked up and gathered. And also the internal stuff that you're doing at operations level. So report both the operation stuff and the financial emissions. I just put this down as a question that anybody wants to know, and the answer is yes. People do want to know, and I said earlier on that I'm an optimist, and I continue to be optimistic. And the truth is that there are things happening. I put this up, and it is a battery energy storage scheme that is in Eden Derry, and it's a superb piece of technology. Basically, what it is, it's a 4 hour uninterrupted power supply for about 10,000 homes in the greater Eden Derry area. This thing will keep the power on when the power stations have failed for 4 hours. And these kind of things are beginning to be installed. This is a solution. If there was one of these in the Spanish network, where the big 2 day fallout for Spain, part of Portugal, and a little bit of France happened last summer, when two solar farms dropped off the grid suddenly. If there was one of these in place near those, that blackout wouldn't have happened. And so this is the kind of advance in technology that is going on. And the advance in this technology is considerable in a whole lot of places. So you're looking at um, all your renewables, and you can see them around the place, that are increasing continuously. And the other things you've got is like direct carbon capture that's going on. So despite, and it's going on a pace. We talked about vehicles, and when you looked at last Sunday in Australia, where you've got a Formula One car basically turned into a hybrid using electric motors, then, obviously there's progress being made everywhere. And biggest concern about the Trump turn back, if you like, on this space was that some of the big investors in the technology may have got discouraged and disillusioned by what he did. particularly some of the people in the floating wind space, which is really, really a pity. But in any event, I remain optimistic. These kind of things are happening and they're being implemented all over the place. So key actions by credit unions to reduce carbon emissions. This is a list of some of them. You probably all have already engaged in some. I'm certain you have because I know the lending that's going on. So uh, you have what the point is, gather it and report it. And these are the kind of things that are being done. One of the features that's in the application is this. There's a set of sustainability initiatives, and this is not comprehensive. It says it's comprehensive, but it's not because you could always add to it. There are more. You'd be amazed. I mean, looking at the document, I keep going back to it, the document of the league that they put out for the stuff that was financed in 2024. You find these projects, there's some incredible projects, and they're all associated with sustainability initiatives. They're part of that, and there are more and more of this. You could continue this list forever. And one of the things we would do is if you've got an idea, share the idea. Because it's not something that you're competing with. It's something that you can happily share. Somebody else would pick up the idea, and that's why I would strongly recommend reading that report. Um, so how do you embed this thing? First thing you do is like anything, you measure, you measure, you measure. Peter Drucker, go back. You won't manage it if you don't measure it. So basically, define your strategic goals. What are you trying to achieve? What level of emissions reduction are you trying to achieve? When you know what your baseline is, you know what you're done or you can do. You're projecting what that plan would be. You're making a plan to get to a certain level of zero. One of the things that you can do at the end of it to get to net zero is you can buy offsets, particularly in our operational stuff. And that's what some people will do is that we'd like to be at net zero. So they get it down as far as they can. And then they look at the balance and they say, well, okay, we could buy offsets. And part of the Greenfield tool is that you can buy offsets with it and from it. We have an agreement with an approved organization that's fully certified that will do that if you want to do it. But the first obvious thing to do is get your reduction, get as much of your reduction in place as possible. And, just people are on board with this. We're seeing more and more of the climate change, the flooding in Escorty recently, the wetlands down in the sunny southeast. We've seen this weather change. The other thing that is almost unseen is a continuous tidal rise, 10 centimeters since 2018. And that's significant because it's continuous. And that is resulting in greater storm surge and coastal erosion. So yeah, people are interested. Finally, the question and answers, and I should have said this earlier to know if there's anybody with any questions, please uh, put them in the chat. And if you've got anything, I'll gladly try and deal with it. I'm looking to see if there's. I don't seem to have anybody asking any questions. I don't know whether that's a good or a bad thing. Um, I just pop one more slide on here. Uh, one of the questions we were asked is what does Greenfleet include? And just a list of this, and we'll include this slide in the slide deck. I wouldn't normally go to this one, but one of the things that we did last year is we had an ESG day for credit unions, and we will do that again this year. I'm not sure of time yet, but sometime before the sort of summer holidays. So in the next, I don't know, I'm going to say 6, 8, 10 weeks. We will do a session probably. I know everybody will sort of say, "Oh God, why do you keep going there?" But probably in Portlaoise because it's the most central. Um, so we probably do that, and we would do a session. We get some speakers, possibly or probably from the credit union movement, because we do have a number of clients who have experience with what we're doing now, and we'll do that. We do have a webinar, I think, a demo webinar upcoming, and in a couple of days, and we're aware also, conscious also that that might be time somewhere around the same time as Kuma, so we're going to repeat that. So we'll send out a note about when we would repeat that. Um, okay, but one of the things that I should have mentioned earlier on is that my page. Um, that's microsite that goes onto your website, and basically you can put your report or as much of your reporting as you want to put up there, uh, and basically it is displayed on a continuous basis. And one other piece of information, I suppose, the Greenify. We're connected with the Greenify activity. Some of you I know are involved, and some of the credit unions on the call are probably members of the Greenify calculator. So it basically is designed to encourage the membership to borrow green loans for purposes. There are five purposes set out in the calculation app, and it gives you an idea what your emissions reduction would be as a result. So we're engaged with them and involved in that process as one of the calculators to encourage that movement, that transition into the green lending space. Okay, still no questions, which means that either you're all asleep or you've all disappeared, or um, I'm not 100% sure what it means. Oh, sorry, I do have some raised hand questions here. Not in the chat. For some reason, I can't get into the chat. What am I doing? Hmm. Oh, sorry, I've got there. Uh, practical examples of doing in relation to ESG. This anonymous question. Yeah, a whole lot of things. What are people doing in relation to ESG? But there's a whole lot of people a whole lot of credit unions are, they've done all sorts of things. So heat pumps, operational stuff, big time. And then increasingly, and we see it in the Greenify, I talked about the Greenify a minute ago, we see it in the Greenify application, and indeed we see it in our own in their own calculators, they transition to green lending. And a lot of credit unions will have very good price offers, very good interest rate offers on the green lending, some of the green lending products, some of the EVs, for example. So that's what they are doing. Um, and I say, in relation to the social and the governance stuff, I believe that the governance stuff is, for the most part, it's well dealt with through the regulation, and the social stuff, as I said, there's an awful lot of community engagement going on there. I take your point about the user group meeting, or the sorry, the ESG day being further north. It's always the case, and then begin to listen to the people in West Cork and Kerry, and uh, okay, we'll find the exact centre and see if we can move it closer to there, right? Um, I ask about price of the green feed package. It's straightforward enough. So if you send us an email and ask for a proposal, I get a proposal out to you. We can do that anytime, but we're going to do the demo. I'm not sure if they're doing a price description on the demo on in a couple of days, but the best thing to do is come through with a proposal. There's no, I don't know, there's some qualification on the pricing regarding size, but I can't remember. I don't know the details. So, but in or around 3,000 annual licenses is where you'd be looking. Um, okay. We any more? Hold on. We do. Question about what if you don't have a budget to lower your carbon footprint? Which is a very good question. The first thing you have to do is understand what is your carbon footprint, and then decide, okay, whether it costs money to lower it. Um, Simple practices around the office tend not to cost money. Usually they're about awareness. And when you're quantifying, for example, the weight of your waste, the degree of your recycling, you can that is in effect reducing your carbon footprint. But again, you need to be able to quantify that. So lending doesn't cost you money. I mean, remember that you have the opportunity with the green loans to continue to achieve your primary objective, which is to lend, and at the same time achieve a secondary objective, which is to reduce the carbon footprint of your financed emissions. So if you're looking at the whole across the plot, you can avoid cost and still move the needle on your carbon emissions. Now, that said, there are other things. So one of the things that, and was it, these are potentially cost increasing. So if you go for an all renewable electricity supplier, or your current supplier may have an all renewable offer, your emissions will reduce, but your bill will increase. But it's the monthly payable. You may decide as a board, as a credit union management team, that okay, this is something that improves our sustainability in emissions terms, but costs us slightly more. It's controllable cost. You can turn that on and off. Not every month, obviously, but that's one way of doing it. And the other way of doing it is this. If you invest in something like the solar panels, you get the benefit of the emissions significantly, and there's a payback requirement for the capital cost of the solar panels. Some of that is grant aided, but if it's worthwhile, I always maintain that if at the end of the day you have made a strategic objective to go to net zero, and one of the ways of doing that is to buy offsets. But the fact of installing the solar panels means that you're postponing the purchase of the offset by reducing the quantum of the offset, and thereby the offset cost. So there's almost a double benefit, if you know what I mean, in payback terms. It's a complex argument that I've had here, but nonetheless, that there's a benefit. There is emissions reduction to be gained if, depending on your starting point, where you're at. Definitely, there is free emission reduction that costs you nothing but a bit of time and effort around you, and look at the various projects that are being done. And then there is the opportunity to increase your lending, and that's probably the best way to reduce your emission, albeit the financed emissions, to reduce those. But again, start to measure them first of all, and then you get some enthusiasm around it. Question about when is the ESG day? Not 100% sure. We said we would do it before we said we would do it before the end of June, certainly. And what we're looking at is there's a lot goes on in the credit union space. There's meetings. There's literally almost every week there's something going on. So we just look at the calendar and say make sure that we don't clash with anything that's already booked. But yeah, before the end of June for sure. And what I do is talk with Catherine here today and Chris, and we try and nail something down, having found the most central venue in the country. I appreciate it. Now, look, it might be possible. It might be something that we look at and we might say we might do two. Sometimes we do that. We do one above the line between Galway and Limerick, or sorry, between Galway and Dublin, and one above and one below. Try and make it more central there. I'm committing to things that the rest of the team here probably kill me for, but we might try and do that. Uh, we've all got the energy awareness part, the waste you've done, okay. Circular economy method. However, the cost of changing to solar panels, heat pumps, etc., all cost. It isn't cheap, etc. Is there anything available from SAE to support in terms of grant aid? I would have to look. Sorry, the SAEI generally, yes. Now, um, I don't know whether they're. I'm sure, know if an organization benefits from those grants. But if you're lending to an individual, you should know the degree of those grants. Or if you look at the Greenify website, they would show you what those benefits are. And I know that for the three and four bedroom houses, you know exactly what the grant numbers are. But yes, the grants, and they do move, so they go up and down, I think, a little bit with the demand for them, if you know what I mean. So yes, those grants are available. Whether they're available to a business such as the credit union directly, I'm not sure. I don't know what the business wants. There are other ways of doing it. I mean, there are some businesses out there who basically will almost rent your roof if you're big enough, and they will come and they'll put the panels up. They'll own the panels, they'll own the output, but you benefit from the whatever's generated. You benefit from that. So there are ways of doing it. Uh, but I don't know whether the credit union would be. I don't know whether the SAA grant, as it currently exists, would be would a credit union would benefit from it. I did it myself. I put in 12 panels on the house, and we did get a grant. The grant was about, I'm going to say, it was two and a half thousand of 12 for the whole setup, and that included a battery. So that'll give you an idea of the order of magnitude. My own sense, and I do have a micro generation agreement with Pinergy, but my sense is that my payback for it is about 6 years, and I would say I also borrowed from the credit union for it. So I'm already in the I'm already in the green space uh, for my financed and uh, my operational outcome. One of the things that we're actually talking to credit unions about, it's as a rebel, I want to praise it myself, is that the micro generation. How does the credit union get credit for the micro generation electricity that it exports to the provider? And that's an interesting one. We don't know whether it's an operational emission or a financed emission. So that conversation is currently going on with two of our clients. But look, happy to talk to anybody, anytime on the subject. We are, and anybody who's met Catherine will know how enthusiastic she is about it. We are anxious to continue to grow with our engagement with the credit union, and also always willing to learn because there are more ideas out there. There are more things that people are doing that I'm happy to share. And as we go through the process with people, we learn every day is a school day. I've probably overstepped my time allowed, but I hope you got something from it. The tomorrow probably now we send the slide deck out, and anybody who's interested in a proposal, just send us an email and we'll get something over to you. We have a couple of questions, and one of the things that we do is, as I said, I think I said it earlier on, is we help you establish a baseline. So if you want to go back a couple of years, you have all the billing and the rest of it, the key billing for the major emissions. We'll show you how to put that into the system, and that means that if you've done some work in the meantime, you will probably be able to see that progress in the reporting. And anyway, look, available anytime to give a demo or proposal for the system. Okay, I'm going to close it there and say thank you very much for your time, and appreciate you staying this long, and I hope you got something out of it.